morning, everybody. It's Thursday, March 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're talking about, please feel free to drop us a line in the chat area, and we'll be sure to get to you during the show. Overnight markets here had May corn up 6 1/4 at 435. May soybeans were up 12 1/2 at 1160 3/4, and May Chicago wheat was up 5 1/4 at 536 1/4. We had weekly export sales out this morning. Another solid week for corn, about 1.1 million in corn sales. The upper end of the estimates, we're looking for about 1.4. Soybeans were also solid, coming in at 613,500. Upper end of the range was about 600, so a good week for soybeans there. 66,000 sold for new crop. And wheat was kind of lower end of the estimates, 271,100 for 23 and 64,000 for 24. Meal sales, 157,700 for 23 and 64,700 for 24. We did have a cancellation announcement this morning from the USDA, 130,000 SRW wheat to China for 23. I know that it was circulating a little bit throughout the trade yesterday that there was a potential for some of those cancellations to come through. And so we did see that here this morning. Guys, good morning. Hope everybody's doing well. Throw it around here. A little bit of data this morning, Dustin. Another strong week of sales for corn. It was nice to see green board this morning waking up, especially after yesterday. And then, as we head into USDA report there tomorrow. So a couple thoughts this morning to start us off.
Yeah. So, I brought up a chart here, Jack, if you can pull that up here. So I think what did we see last week? We saw funds liquidating a big portion of their record shorts. It's just a 1 week change here. So that started going into Monday, Tuesday. We found that rebound last week. It's perfect timing coming out of March 1st notice when a lot of those contracts had to be cleaned up. But this is the first day that we are actually trading above that 20-day moving average since December. So a bit of maybe a technical rally where there was a lot of changing of hands of ownership over the last 2 weeks. And we are looking at rising outside markets. You have gold at all-time highs right now at the moment. Dollar index has been falling. Jason brought up a good point earlier about the real. A lot of this weakness has been in the face of a rather stronger real uptrending over the last couple of years. So I think it is definitely a good sign. I wouldn't want to say necessarily that all the risk is gone and markets are going up from here, but starting to close above some of this major moving averages, maybe we can get some momentum going back the other way if funds are going to continue to liquidate here.
Yeah. That's exciting to get some positive news, or at least something on the horizon that, we're turning a little bit higher. Nice to see some funds continue to cover on the weekly commitment of traders as well, as we talk about that, we do have some of these cancellations out of China. There was heavy SRW purchases. What are our thoughts on that? Has it come to different values that they can buy it better, or what's the thought there?
Yeah, Black Sea values have dropped tremendously, below $200 a metric ton. So, this is notorious, right? We saw them canceled over 500,000 metric tons of beans when Brazil became way cheaper than the U.S. So it could be option origin. It could be flat out cancellation. Either way, it's news to the market, obviously, with wheat down as much as it was and making new lows. That's obviously spoiling the punch bowl a little bit here, but it's not that surprising. This has been a long time coming. China's been doing this for years, and valuation's just too cheap in the Black Sea region for now. Wheat's going back to U.S. being the world's residual holder of wheat. That I think I'd look at the wheat corn ratios for direction there. It's probably going to fall back to that.
That's a good point. We've seen last couple of weeks, a little moving and shaking in the renewable sector, and announced, I saw a story this morning that Bunge and Chevron have partnered up to bring online a facility down in Louisiana scheduled to go in 26. I thought Justin made a couple of good points this week of just the cycling through good facilities versus maybe facilities that are lacking some of the ability to run efficiently, and some consolidation things in that industry. But at the same point, it's still they're gearing up. It feels like they're gearing up and ramping up for that demand to come online.
Yeah, I think so. It's, I think it's a couple of issues we have. One's the government. We're pretty stupid generally, but we were talking about this last night. The amount of oil, used oil, apparently, that we're bringing in from China, mostly, some other countries, but mostly China, use cooking oil to satisfy some of these mandates for renewable biodiesel. Pretty stupid, because we're paying for it as taxpayers to give these giant credits to the people that make this, but importing Chinese oil, it's pretty silly. So I think that's been part of the reason soybean oil has been on the defensive for months and months now, is the fact that we're not using it, but at the same time we're getting massive investments from the public sector. I think these recent stories, like Dan said, about these older traditional biodiesel plants shutting down, I think that's very similar to what we saw in the ethanol boom, right? Everybody made a plant, there's a lot of money to be had, and once the market starts to mature a little bit, you shut down the least efficient ones and invest in the ones that make more sense. And renewable diesel is just that's going to be the future of it, right? The traditional biodiesel makes no sense compared to renewable diesel, because chemically it's exactly the same as regular diesel. It doesn't have all the issues that traditional biodiesel has. So I would expect every one of those plants shut down over time and are replaced with renewable biodiesel.
That's really good. Looking at South American weather here, by all estimations, still appears to be pretty good. However, there's some discussions popping up about potential drying out forward, for that second season crop. Jace, you're shaking your head. Did you read the same stuff I did? That's kind of how I interpreted it this morning.
Yeah, I was looking at that. I kind of pulled up the crop profit that we talked about in the past, just as a, it's a one-day change. If you look at the GFS model, the European model, they've taken, some rain out in the forecast. On a percentage basis, let's say dropped it, as a percent of normal, dropped it 10-15%, which puts us slightly below normal precip, nothing crazy.
Mm-hmm.
But we were coming off above average precip just from a day ago. So just definitely drier, a little warmer too. I think temps, they kind of, it's a little higher, a little drier. With everything else going on, probably helped, the rally.
It'd be kind of nice too if you got, to be honest, a little bit of a scare pop, and you're turning some of the technicals up in the market. Guys get.
Yeah, if dollar kind of weakens and we can get a little bit of a drier forecast in South America, and obviously we got a big report, March 31st report. That's obviously a big wild card. Funds really
28th, but I know what you mean.
Oh, excuse me. Yeah, 28th.
Yeah, if you for everyone kind of thinking about how crop profit shows this, if you want to show my screen real quick, Jack. So this region here for second season corn is where it's getting dry. So we're 66% of normal for the next 2 weeks in the European model. That's coming out of the last 30 days where we've been 74% of normal rainfall for that weighted average region as well. It might be a little hard to see on the screen, but that's the way they record it, is weighted average by production areas. So definitely a big change from the prior day though. So
I think to add, my 2 cents here, the difference between first season and second season, I think, is quite dramatic as far as like rain totals, because you start to enter their dry season, right? So first season corn and beans, it's a rainforest. So they have, if you're 74% of normal, it's still more rain than we get, a lot of, so I think that's kind of one of the confusing parts when you see like, oh, we're 20% behind normal. Well, you don't need normal down there because it's a rainforest in a lot of areas. But when you get into second season and you start cutting percent of normal, I think that's kind of important because it tails off to what, normal for the second season isn't the same as first. So we should, even start looking at actual amounts that fall. Corn needs more rain. It's lighter soils. So, safrina, I think, can get nipped a little bit more than what a first season crop could, I guess. So it's worth watching. I know we're super dry here in the Midwest, and it's March 7th. So I'm certainly not going to get too excited about that right now. And, it might be a bearish headwind at first because we have a fast planting pace, but it is very dry. So, I know even on our farm, we're, Western Illinois, it's super dry. It won't prevent us from planting, but it is, it's kind of one of those things you look at like, it's going to rain, right? So,
Right.
so not getting too excited about it, but we have taken everything's been bearish. Every single thing we talk about has been bearish for so long that, some kind of a rebound and, going into the March 28th report, there's a huge discrepancy on what people think acres are going to be. So it's going to be an interesting report. I think there's a 4 or 5 million plus acre disagreement on what, corn and bean acre mix is going to be. So
Somebody
be
put a gun to your head, Justin. I mean, where are you at today on acres?
Dustin's been talking about this, and I tend to agree. I think I would think corn acres are down more than we think, and bean acres are up, and a lot of that is a lot of signs kind of point to that. In my opinion, is we've had heavy corn acres. I don't think it's a good environment profitability wise for corn on corn. Input costs relatively are high for corn. Profitability is higher for beans. The ratio is higher, and dollars are tight. Is maybe my most the biggest reason I say that is, we've talked about banks for a couple of days here now, and after yesterday's, we had even a lot more calls come in, people talking about it, and which is good. That's the whole point of this. But talking to more banks, and it's if you're going to get 85% of what you would normally get as far as approved loan, you try to cut costs wherever you can. So some people, I think, are buying a lot cheaper crop insurance. I don't necessarily agree with that, but you cut back where you can to make the dollars work. And one of the biggest ways to do that is plant a cheaper crop, right? So if you can plant beans for, plant more acres of beans than you can of corn at the same dollar. So a lot of different factors that I think go into that. I don't think the corn and bean acre mix goes down much, except for, maybe lose some acres to cotton, sorghum, in the fringe acres, some things like that. But we're going to plant the crop. It's just, I think we'll get more beans because of it situation.
Well, you can't even insure anywhere close to a reasonable revenue number with crop insurance. So we set a really low crop insurance price in corn. We kind of talked months ago that the market probably shouldn't do that if it wants to retain those corn acres. So we were kind of thinking new crop corn might hold in a little better, but setting a 466 on an RP 80 or 85 policy. I mean, it's just so far below where guys can count on it. I would think is a big factor, right? When you're going in and looking at these numbers and looking at your balance sheets, the risk is super high to plant corn.
Yeah, and actually, if you're looking at like a $3 outcome, that's not even. I don't need that, Jack. But if you're looking at a $3 outcome, you're looking at a better profitability for the average grower taking an 85% policy than you are at a $4 outcome. So that's one thing I think the market always has a hard time understanding, is that like when we start getting into some of these safety nets, like there's improved demand at lower prices. There's farm bill payments that are kicking in because the Olympic average is 485 this year. So you're starting to see payments starting in that 420 range at average yields in the county for those that took Art County, and then 401 and below for those that took PLC. So if you're also looking at 85% policies at average yields, you should start seeing payments on that in the 390s. And so if you're going to payments on farm bill and on crop insurance, and you're seeing increased demand on basis because of low futures prices, like that's actually one of your better outcomes. Is the lower we go after a certain point, you really want it to drop while those things are active. But it's the drop from $4.60 down to $4 is probably the biggest risk for growers this year, and we could certainly see that. I think just readjusting your expectations of how low things will go. Some of the strategies out there might be better suited for just taking those first dollars of coverage this year rather than trying to get something that protects you all the way down to $3.
Yeah, that's we've been through these scenarios before, and that's always a tough concept for a lot of people. And it's almost like you don't believe it, and these kind of environments make people make bad decisions. Emotional decisions about this thing's going to zero. You start watching Twitter, and you got to sell as much as you can. I think you have to be very disciplined here on the strategy, right? What the game plan is, how it fits with crop insurance, because we're March 7th. Anything can happen here. But you have to have a good game plan, and we could end up being super bearish by next fall. And I understand the bearish argument there, depending on what acres come in at, if we have a good yield, all those things, those are a lot of ifs. And I think we're leaning towards a lot of those ifs happening on the bearish side. And a lot of people are saying you need to be sold for 2 or 3 years after a $2 break. So I just be cautious, and you have to have an exact game plan of, how you're going to play this with your crop insurance, because it is important to us. And then we've seen people, when you get into those double, triple payments where they want to quadruple, like I really need the money if it goes down to 3. And it's usually a pretty bad mistake.
That's really good points, guys. Appreciate it. Rylan, we're just coming into the open here real quick. What do you got for me on the livestock side?
Not much. It's been pretty quiet here, Dan.
Okay.
We have a little bit of a lower close, no real cash trade to speak of in the cattle yet. Asking prices are sitting at 186 to 87. So the idea is that cash is going to stay relatively firm this week. That commitment has been going up in futures all week long. So kind of a double-edged sword right now. I think there's going to be a lot of focus on how corn trades. If this rallies for real, then feeders may start to be a little bit on the cautious side. We're already starting to see that now. We're starting to hit some of these, support levels, 20-day moving average in the front end of the market. So I think we're just seeing a little bit of caution here, maybe some hedge pressure. Outside of that, we're just totally sideways. On the hog side of the market, really not much to speak of there. It's been on a pretty nice break here, but trying to find some support, trying to narrow a little bit of this, the premium relative to cash right now with the index at 81.31. So that should kind of narrow up here a little bit, and commitments starting to lighten up. So we've been seeing some of the longs, the spec longs start to move out, I think, just as we've kind of topped out a little bit here. So just looking for a bit of a stabilization going towards the end of the week, and still keeping an eye on the forward spreads to see if we can't get a little bit of a bounce after we see the roll kind of stop April to June.
Very good. Thanks, buddy. Appreciate the info. As I mentioned, just came into the open. We got May corn up 5 3/4 now, 434.5. May soybeans up 10.5 at 1158 3/4, and May shoulders 532 3/4. Tomorrow we will have the USDA report out at 11 o'clock. We'll have our thoughts and comments post report on that. If you've got a slow TV night, the State of the Union is out tonight too, just to give everybody an update. And then every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Standard Time. Appreciate everybody's thoughts this morning, and we look forward to talking to everybody tomorrow. Have a great day.
Thanks, Dan.
Thanks, Dan.
Thank you.